Well, we've been spending a lot of time talking about Europe, but you know what? Pretty important that we talk about China. That's where 20% of the world's population lives. So we now have a roundtable. There's a lot to talk about. Joining us now, we have Arvind Subramanian, the senior fellow at the Peterson Institute for International Economics. He's a former assistant research director at the IMF and author of a new book, Eclipse, Living in the Shadow of China's Economic Dominance. Also with us right here in the studio, Stephen Leeb, president of Leeb Capital Management and co-author of another book, Red Alert: How China's Growing Prosperity Threatens the American Way of Life. Gentlemen, thanks for joining us. Let's go first to Arvind down in Washington, D.C. Arvind, you have made the comment that China has the money, $3 trillion in foreign currency reserves, about 33% of the world's foreign currency reserves. So why don't they bail out the EU?
Well, that's a really good question, and I think, in fact, that is one of the issues that will come up at the Cannes summit this week. The question for China is it worth investing in Europe, and what do they get in return? And I think at the moment, China is sort of sitting on the sidelines and waiting for events to unfold. But at some point, if events in Europe get very critical, then China will have an interest to support Europe, because Europe is one of China's biggest export markets. And at that stage, the Chinese will have to say, well, we'll give you the money, but first, do we give this to you directly or via the IMF, so that we can all do it together? And what do we get in return? So these are the questions that should be discussed and will be discussed over the next couple of days.
Stephen Leeb, is bailing out the EU in China's best interest?
They don't feel it is right now. I mean, because they don't feel it really needs a bailout. They feel that they can probably deal with their own problems. What China does, they do only in their best interest. And right now, I think one of the cards China has is that they're on the verge of easing monetary credit. And they can boost growth internally. And one of the things China desperately wants to do, desperate may be too strong a word, is to generate growth internally. They have been an export-driven economy for, as long as this whole miracle has been going on. And they will continue to be an export-driven market. But ever more so, they're going to want growth to come internally. That's their long-term plan. They would like to be a net importer once, probably within the next 10 years. And they would like the yuan to be the world's reserve currency. And you're not going to get there by exporting. You're going to get there by importing. So there's a lot of reasons that China right now is not stepping up and panicking to help the EU. It's just not in their best interest. I mean, it's not against them. I mean, they'd love the EU to, suddenly solve all their problems. And if push came to shove and it did become desperate in Europe, yeah, of course they would help.
Arvind, let me put this question to you. We're looking at the yuan there at the moment. We've also taken a close look at some of the investments that China has made worldwide, and it was pretty startling. We took a little bit of research from the Heritage Foundation, and we were startled to see just how much they have invested. Of course, we also know that they've invested quite a bit here in the U.S. In fact, they're one of our biggest purchasers of Treasury bills. Is there some political leverage that they are getting out of this, and countries should be maybe a little bit more careful, or at least understand that there might be political motivations behind some of these investments?
Well, I think that if they, run the kind of growth strategy that they do based on keeping their currency cheap, they are going to accumulate a lot of reserves, which they then have to find some outlet for. And so far, they've been quite content in investing it in U.S. Treasuries and in other places. There's no doubt about the fact that they're net creditors gives them a lot of leverage. And what's happening in Europe is a great example. If Europe were to, really need the money, there's no place that they can turn to except China. And that's what's so striking about the current situation, which what's happening in Europe illustrates so dramatically. Here you have Europe, one of the great superpowers, potentially in deep trouble, turning not to the United States, which is, the preeminent superpower, but instead turning to China to bail it out. And what could be more dramatic as a shift in power? Now, once that happens, China has a lot of leverage. China will say, well, in return, give us market economy status. In return, take us off the arms embargo list. In return, we should have equivalent status to the US and EU in the International Monetary Fund. So they have potentially a lot of leverage coming from fundamentally their growing economic dominance, but in particular the fact that they have so much cash which they can invest and bail out countries in trouble.
All right, Arvind, what about, no veto power in the IMF, so why don't they get that as well, right?
Exactly. I think that's something that will be on the table, now and in the months ahead to come. But, a lot of that depends a little bit upon, how badly Europe and the world needs the money from China. Today it looks as if, Europe will pull through, but the game is far from over in Europe. And, we could still have a slightly unfortunate set of events unfolding there, in which case Europe will need a lot of cash. And the only country able to provide it is China, and at that stage they will say, well, why is it that you, Europe, as a debtor, have veto power in the IMF, and we, as providers of cash, we don't? And that's a question that's not easy to answer effectively.
Let's go back for a second, Stephen. We were looking at a map provided by the Heritage Foundation about some of the investments they've made outside of their own country, but quite a bit of that has been in energy.
China views energy as a strategic need for the 21st century. And China believes that fossil fuels, hydrocarbons, will come nowhere close to satisfying their needs. In fact, there are Chinese peer-reviewed papers saying that coal, not just oil, but coal will peak within the next 10 to 15 years. It's strategic for them to control the renewable energies, and they're doing that right under our noses. Solar energy, they right now have at least 60% because they're building polysilicon manufacturing facilities much, much cheaper than anyone else. Now, we've all heard about Solyndra, but another stock, Evergreen, used to be the bellwether solar company in this country, has gone from $120 to 3 cents. That's because they can't compete with China. In wind, there is no country that can scale up wind other than China. Why? Because they control 97% of the rare earths. And without heavy rare earths, no scaling up of wind turbines.
But why do you need rare earths for a wind turbine?
Because
Explain that.
Heavy metal, heavy magnets. You need powerful magnets. And incidentally, you also need them for hybrid cars and a lot of other electronic equipment. One other thing, Bloomberg reported, I mean, this is just within the last 3 or 4 days, a report on Goldman Sachs saying, and I'm using the word, that copper will be or could be unimaginably, Goldman's words, unimaginably high in the next 3 years. There is, if you look at grades of copper, gold, anything at all, straight down. If copper is unimaginably high, imagine total scarcity. How are we going to build out electric grids? How are we going to build hybrid cars? How are we going to pipe our homes? How are we going to build homes? So with that in mind, what is China doing? China's mining for copper in exactly the same places that we're making war. They have spent billions of dollars establishing an infrastructure paramilitary in Afghanistan, and they're mining for copper there. And, what really makes my blood boil? They're actually using our own troops in a way to distract the Afghanis. And we're just sitting here. We are, in a word, and I can't go on, but in a word, we're fighting a war with China for resources and for the 21st century. And we don't know it, and they do, and they're doing everything they can to win it, and we better wake up in a hurry.
Arvind Subramanian, are we fighting a war, and does it necessarily need to be adversarial?
Yeah, that's highly exaggerated. I think, there are going to be elements of competition in this, but there's also a hugely cooperative agenda here. I mean, let's not forget that, China, because it's reliant on exports, has an interest in keeping the trading system open. That's a common interest. That's not a conflicting interest. It's true that at times China behaves, by manipulating its exchange rate, tries to undermine the open system. But broadly, and if you look over the last 20, 30 years, and especially going forward, trade is still going to be such an important part of China's growth strategy that they will have an interest in keeping markets open. So I think we shouldn't exaggerate that. Now, as for China's, we were talking about what the constraints domestically in China are to growth, and I thought that was what the point of the photographs that you were showing. I think China is a little bit vulnerable because it has overinvested in real estate. There's potentially an asset bubble. So the key question is whether, when that bubble bursts, China will be resilient enough to overcome
First
that.
of all,
and I think
the bubble isn't going to burst, Arvind. I mean, basically, you're talking about a small section of real estate. And when you look at those cities and consider they want to move 300 million people into them, they're putting the horse before the cart, which is something we're not doing in this country. And when you say it's all cooperative, I don't believe it is cooperative. Why do they have 97% of the rare earths in this world? And why aren't they sharing that? And why have they undercut everybody? And why have they put all our solar companies out of business?
All right.
If it's cooperative. That's not cooperative. That's for China and China only.
We want to thank both of you gentlemen for joining us today. Unfortunately, we got to leave it there. Obviously, a debate that will continue to rage on. We'll have to have you both back.
Can we have them back on the show, Lisa?
I say so. I
Absolutely.
vote yes, as do you. All right, that was Arvind Subramanian of the Peterson Institute for International Economics and Stephen Leeb of Leeb Capital Management.